Michael Gayed on Twitter says, I can't help but look around this airport wondering how clueless people are to what's going on in the financial markets and how devastating it likely becomes for each and every single person distracted by this bullshit. All right, good evening. Welcome to my show. I'm so glad that you're watching. I think I can make this one interesting for you. My name is Jerome, and my channel is called Psycho Silver. And aside from being a catchy name, I did name it that because we're gonna discuss the psychological aspects of money and finance, but we're also gonna discuss silver a lot because silver is the most interesting money. Silver is the only money. Silver is money. And so that's how my channel got its name. And this is my 4th episode, and I will be sharing this one with friends and family. So thank you so much if you put this on and you do give it a like. I really appreciate it. We're gonna get some momentum here. This is my 4th episode, and I'm very embarrassed to admit that my first 3 episodes, I liked how they came out, but I recorded the whole freaking thing with my microphone backwards, and so the sound quality wasn't that bad. I'm lucky I had some friends that could point out my mistake, and I got that corrected. I got a brand new microphone anyway, and this thing sounds good. It sounds really good. I hope you think it sounds good too. I know it sounds good. But the show that I have tonight, or whenever you're watching this, is really interesting. What we're gonna do is we're gonna run pretty quickly through a conspiracy that's been spreading through the internet. And you know, the conspiracy theorists are looking a lot better lately, but this is a financial conspiracy. I usually don't take conspiracies or these anonymous posts super seriously. I treat them with very low sense of urgency. But what we're gonna do here is we're gonna read through it, and then we're gonna look for evidence to see if it's true. And the reason that this caught my eye so much and it's spreading around is because there's big time signs of stress in the financial markets, and this does not look like it's gonna be an ordinary stock market drop. People usually think that the economy is the stock market, and nothing's further from the truth. But we got big things happening, and to be honest, it's kind of scary. I don't want to carry on too long before we jump into it, but I do want to say we got some serious shit coming. This is for reals, and I do suggest that people be prepared with basic food and water, and I recommend taking some money out of the bank. And I don't want to be an alarmist, but we're gonna review some interesting information right here, and you tell me what you think, okay? So let's jump into this anonymous post that we're gonna have a look at. And this is quite long, and so I'm just gonna be giving you the highlights. I don't want to read the whole thing verbatim for you. The title of this post, and I do believe that it was anonymous, and this has been spread around the internet already. The title of this post is that there will be a liquidity and credit crisis as banks and online payment systems are about to suffer a huge outage in the coming days. According to this user, there's already talks of a liquidity and credit crisis happening in inner circles, and that this is big. So we're 30 minutes away from Saturday, and there's already been rumors about the 24th, something big happening, and we're gonna find out really shortly here. Saturday, banks and online payment systems suffer an outage in Europe and the United States, spreading worldwide. Talks of liquidity and credit crisis happening will spread quickly. So we did see that in 2008, and we saw a little bit of that during the peak of the illness scare. Sunday, customers will try and get money from the bank and be turned away. Talks of bank runs on Twitter and Facebook will be promptly banned. Late Sunday night, Eurozone banks will suffer a liquidity issue and fail to meet critical margin levels. Okay, so most people, maybe not anyone in America, has never witnessed never witnessed a bank run, and very few people have ever heard of a bank run. But there is bank runs happening in the world right now, and in general, it's in a far away place where the way of life is different. We did see that in Lebanon with people holding up banks to get their own money back. Is it impossible? No. Monday the 26th, liquidity crisis contagion spreads to the United States. Financial instruments such as those used by Archegos. Archegos was the financial capital, the financial investing company that did get that. They took that big fat L on GameStop. They got blown up. GameStop, meme stocks. Yep, so they're going to be highly levered, right? And carrying short positions. And so they're saying we're going to see more of those blow up. And then Bank of America, JP Morgan, and Goldman Sachs are rumored to be insolvent with others. So those are the biggest of the big boys. If those banks are insolvent, then big and bad things are definitely coming. The super rich will attempt to pull their money out of banks only to be denied. I don't know about that. That might be the biggest conspiracy in this. I don't know about that one. Stock market drops 20% and will be closed for a day. Yeah, I do believe if it does fall 20%, it automatically closes. Tether and other stablecoins will fail, causing cryptocurrencies to crash as they become illiquid. I think that can happen. Even without a huge banking crisis, I could see that happening to crypto. We've already seen major signs of stress in Tether and Bitcoin. Tuesday, Eurozone total meltdown. Bank deposits are bailed and most people lose all their money. That would be pretty incredible. Social protests erupt. US stock market drops another 20% before trading's halted again. Hedge funds collapse. Banks are stuck with meme stock shorts, which will be revealed to be in the trillions. Ooh. Banks fail critical margin levels. Wednesday, Thursday. Oh, look, on Friday. Oh, wait, hang on. I like this part. Meme stock, silver, gold trading is frozen and halted, but this will only make the problem worse. Dollar insolvency is all over international news, and silver and gold skyrocket. I like how that sounds. We'll see about that. Mainstream media will say it's the Depression 2.0 and the collapse is here. Okay. Pressure on current admin to design. Stock market drops even more. Grocery stores are empty. Now that's fucking scary. Rumors of a coup against the US government will begin to pick up on social media and gain approval. Massive protests. Police will be deployed. Okay, I'm glad we're at the end here because this is getting pretty crazy. Friday, voter fraud data is revealed and dumped on the internet, and this will add a fuel to the fire. Reveals stolen elections. Ooh, I shouldn't have said that word. I'm gonna get banned. Yeah, stolen something. BRICS will pick up steam and replace the dollar then and now. Okay, so you got the idea. This is being passed around, and I definitely don't believe this, okay? But I do have some really interesting stuff to show you about what's going on in the economy, and it's really scary. And for as crazy as this is supposed to sound, one thing that I know from studying current events and economics as a layman, not trying to oversell my knowledge here, but we are in for something big because the debt is out of control, and our politicians really fucked us over. So let's jump into this here. I just want to point out that today the Dow dropped 500 points and we're on a new low for 2020. Rising recession fear. So here we go. This is CNBC, and they would have not have used the recession word a few months ago. It was supposed to be the strongest economy in history. Remember that earlier this year? There's no inflation. It's not a recession. Everything's fine. And now they're okay. Now they're admitting it. All right. Thank you, CNBC. Right here, I have a chart of the Dow Jones Industrial Average over the long term. And the only thing that I wanted to point out is just two quick things about this. One is one of the main things you learn studying these charts, technical analysis, is things that go up like that. I mean, it's nice if you're an investor, right? Like you just made a lot of money. But on the whole, things that go up like that, they go down similarly. In fact, it's usually a little steeper. Usually it's more like that. That's how charts tend to look. Of course, this is a whole different scale, and you have entire nations looking to prevent this. But it's true of many small things, and I believe it will also be true of big things. Will this actually happen? I don't know, but you know, just the fractal nature of reality suggests that that could happen with something really big too. And so the Dow dropped 500 points today, and I'm all about putting context on this show. So here we go. I just wanted to point out, I was waiting for this really noisy car to pass outside. For context, a 500 point drop in the Dow. Here is the largest daily, let's go to points. The largest daily point losses in history. The largest daily point loss in history was during the height of the big P that we just went through. I don't want to say that word either. 3,000 points in one day. And we can scroll down to the bottom here and see the 20th largest loss in history in terms of points was 915. So 500 is only what, 60% of 915, but that's still really big. But now we have some context, like, yes, that's a really large drop, but definitely not the end of the world. And one other thing I will point out about this chart is, let's see if I can get it centered here. When you do part of technical analysis, and just a reminder, this page is for people that are beginners. I'm not a big financial mind, and I'm not claiming to be. And so we're going to do some rudimentary technical analysis, and we're going to rudimentally discuss economics and finance. So I'm not an expert. Let's get that straight, okay? But we did see that this chart fell right into resistance right there, and so maybe it could have been a bigger drop. But in general, when things fall, they fall to the point where it recently had a peak, and that's what happened right there. So that's that. In unrelated news, it's related, but it's unrelated. We're gonna have a look at this post from Silver to Mars. And before I get into the discussion of that, I do want to say one of the things that we're gonna do on this channel is we're gonna keep an eagle eye, hawkeye. What's better, eagle eye or a hawkeye? Eagle eye sounds better. We're gonna keep an eagle eye on these Comex vaults, okay? This is where really, really big things are happening in gold, in silver, and it's telling a story. And so let me just get you caught up on that real quick if you don't know anything about this, okay? The Comex vault is the biggest vault in America for precious metals, and they do also do other commodities. Comex is short for Commodities Exchange. So you have gold, silver, and right here we're going to be talking about platinum, okay? Platinum is very important because it's an industrial metal and it's a precious metal. It has monetary value. And what we've been seeing, the trend in these Comex vaults, is the metal has been disappearing out of the vault, vanishing without explanation at an unprecedented speed. These vaults are being drained. There's a lot of speculation as to who's taking out the metals and why. And these institutions have no incentive to tell you what's happening. So we're left to speculate, okay? So let's speculate. Let's have a look here. Silver to Mars. On Wall Street, Silver writes, Comex Platinum down a stunning 43,900 ounces, or 37% of all registered in one day. The registered is now down to 73,800 ounces. What does that mean? Registered, what registered means is that that's the amount that's available for buying and selling. So you'll have metal in the vault that's not up for sale. It belongs to someone. It's owned, okay? Whether it's an ETF or a private owner, it belongs to somebody. The registered is what's available. And so 1/3, so that was like someone went into the grocery store and they took 1/3 of all the goods in that in one day. That's very unusual. These things are set up for smaller transactions. Like, they got completely fucking wiped out. That is a red flag. That is a red flag, okay? Big things are going down. And why someone would do this? Well, let's speculate. Why would 1/3 of the registered platinum disappear? Someone's trying to protect themselves against losing wealth and dollars. Someone's trying to secure this. It's an industrial metal, and they want to hoard it because they're worried they're not going to be able to get it later. I mean, those are the two biggest reasons. Yeah, I could come up with crazier reasons, but I'll just stop right there. It's probably one of those two, but we'll just leave it be. But again, we're gonna keep there's something similar happening with silver and gold, but 37% in one day is stunning. Yeah, he used the right word there. Onward. Right here we have a tweet from one of my favorite Twitter accounts. This is the Great Marti, and if you're not following him on Twitter, I recommend you do follow. This is one of the best accounts. He has been a contrarian, calling for a crypto crash for 2 years. A lot of trolls are always on him, and he's fighting back, but he does really excellent analysis. And sorry to say, you can hate what he says or not believe him, but he's becoming, every day, his predictions are looking better. It's coming true, and it's pretty scary because his outlook on the world is very, very grim. He also does great technical analysis, but really simply, we're just looking at some more evidence. We're looking for, is there evidence that something big is coming? Yes, there is. This is a chart of inflation right here. Okay. That line going up there, that's everything getting expensive, right? And the same thing that we looked on that we were looking at on this chart over here, okay? What goes up must come down. Yes, here too. But that's also scary. Inflation's bad, but deflation is equally scary. Because deflation means that people don't have no money. Onward. Another tweet from the Great Marti. This is the Dixie, the DXY. Explained really simply, it is the strength of the US dollar against other currencies. So let's zoom in a little here. What he's showing us is that the dollar's getting really strong. Look, the dollar was strong in 2002, and we had all this going on for a few years here. Oh, you can't see this. Let me take myself off the screen. The dollar's not as high as it's been, but this man believes it gets much higher. And when it reaches 140, he's predicting that Europe implodes because of it. You might be asking yourself, why is a strong dollar a bad thing? And I asked myself the same question. I had my ideas, but like I said, I'm not an expert. So I asked my friends in Reddit. I said, Reddit friends, can you help me explain why a strong dollar is a bad thing? And they did. So let's read one of these. There's an excellent answer on Reddit. So I copied this chart over Reddit. I asked a question, and look at this really wonderful response that I got from a Reddit user. The Fed is, let's make sure we can read this along together. The Fed is currently reducing the supply of dollars by raising interest rates and tightening its balance sheet. So raising interest rates means that banks they owe a higher interest when they borrow from the central bank. But if you have a variable rate loan on your vehicle or your car, you'll also be seeing your rates going up. And what does that mean? That means you're gonna have less money because you're paying more interest, okay? Simply said, every country in the world except Russia, until recently, holds the dollar as its reserve backing for the local currency. As the dollar supply shrinks, central banks worldwide continue to buy dollars and print their own currency. Exchange rates collapse. The dollar supply declines as the local currency supply increases. The collapse of exchange rates preceding a recession is called the dollar milkshake theory. The analogy is that drinking a milkshake through a straw is similar to the Fed sucking up all the global dollar liquidity. Simply explained, this means that people need dollars and there's not going to be dollars available to them to get to pay their interest. And this is going to cause all kinds of problems because different nations are going to print the hell out of their own currency to try and make up for that, okay? Peter Schiff's bank recently went bankrupt because he does not understand this aspect of economics. Ouch! I like Peter Schiff. He opened a lot of foreign currency accounts for his clients, and those accounts got killed by strong dollar. Ouch. In the USA, we hold real estate and treasuries as a reserve. So while in foreign countries dollars dry up, in America, financial bubbles pop. At some point, these countries need to do something to protect themselves from this phenomenon. They need to sell the dollars that they hold on as reserve to support their currency. I don't see that happening because their governments are dollar rich, while their people are dollar poor. At some point, the system will cause so much chaos that either a revolt or a complete economic collapse will occur. The dollar reserve system is becoming increasingly unstable. This is complicated stuff, and even someone with a high level of expertise in this area would have a hard time simplifying that. And this show is supposed to be not simple, but I'm supposed to make it easy to understand, okay? And I think the basic thing about this is that we made a lot of dollars, and now we gotta take some dollars out of the supply to stop inflation, okay? And it has a profound effect on other countries. And if you're Russia, if you're China, if you're India, if you're Brazil, if you're any of these other countries, it's a blessing and a curse. But who wants to be beholden to another man? They cannot be happy, and when they do suffer these consequences that we've created through the debt, they're gonna want a way out. And we're already seeing that. And so these are all symptoms of a disease that is the debt. And I think by simplifying it in that sense, I'm getting it right. Onward. We only have a couple more slides. This show is going to go about 30 minutes, maybe 35 at very most. We're almost there. I want to show you a couple more things because I posted this big conspiracy and I want to see if I can find evidence for it. Is it true? I don't know. So far, it's not looking good. But does it happen tomorrow? Probably not. But does it happen like that? Probably not. But we got some serious problems, okay? Here we go. This is a chart that I often show my friends when I'm explaining the debt. This is called M1. The money and supply, the M1 money supply in United States right here. Let's see if we can get it. Let's get it defined real quick. Let's open up what is the M1 money supply? Here we go. M1 money supply includes monies that are very liquid, such as cash, deposits, and traveler's checks. So that's money. That's liquid money. Okay, money in accounts, not tied up into real estate, not tied up as assets in a business. It's liquid money.
But also friendly.
So let's go back and look at this again. What do we saw a steady increase here, a steady increase of the money supply all the way from the 60s. Look at that. And even here it started to ramp up a little bit, right? I think that would probably be 2008, because that's really did where they 2008 is, I mean, we abandoned our sound money at different points. There was a point in the 60s and there was a point in the 80s, and things got worse and worse. We were supposed to have a sound economic system, but we turned into a kleptocracy. And you can see pretty easily right here where the kleptocracy really got out of hand. What are we saying about these charts? Look at that. What happens to something that goes straight up like that? Is that what's happening? Can you see that? Get me off this. It's going straight up again, just like those other charts, ain't it? And now we got a little hook down. Does it look like that? That would be terrifying. I don't think that's possible, but who knows? Maybe if we see the chart look like that, then that'll be the incentive to roll out the new digital dollar, eh? They've been telling us that they want to do it for a long time. We need the digital dollar.
Wolves can be dangerous, but also friendly.
As a reminder, our next financial crisis could be triggered by a liquidity squeeze in the $30 trillion treasury market. The New York Fed's solution to stabilize the market, and I'm not making this up, is to just say that they're going to buy treasuries. That's it. Effing scary. That's pretty much unrelated. We'll talk treasuries another day. But I thought that was a pretty potent tweet there. And we're finding more evidence, aren't we? We're building our case to prove this conspiracy. Here's a post on Gab by David Jensen. Bond rates are running. Central planners at the Fed have collapsed their multi-decade debt bubble economy. Next comes currency disruption. Prepare for the worst. Hashtag silver, hashtag gold. Okay, what we're looking at here is so that red line that you see there, let's paint that red line. This red line right here, that's debt. That is debt that is owed to somebody, and we all owe it to each other, right? In one way or another. That's debt. All sectors, debt, securities, and loans, going straight up for a long time. And look at this black line again. This is M2. And so this chart, we already looked at the M2. We looked at the M1, I believe. Let's make sure that. Yes. So let's remind ourselves, what is M2? M2 money supply is less liquid in nature. It includes M1 plus savings, time deposits, certificates of deposits, and money market funds. What are we seeing here? I mean, it went up and it came back down really strong. And so what I do believe this means, big picture, what this chart here is saying to you is that the debt continues to go up and the amount of money that's in the system is drying up. And the way that it dries up is with treasuries, and the way that it dries up is with interest rates. Okay, we saw that in the post in the reply on Reddit. They use the interest rates, treasuries. They raise interest rates to soak up money out of the economy. And now they've accomplished that task of soaking money up out of the economy. They said it's to stop inflation, but now there does not exist the dollars. They just don't exist. There's not enough dollars to pay the debt. So who's going to fail on their debt first? Well, probably the people with the most debt that are generating the least income to repay those debts. So will the meme stocks crash? Yeah, they will. If you're a bank that's highly levered in assets and you're insolvent, yeah, it can be a bank too. You're lending to these financial institutions that are making huge bets, shorting markets. There's not enough dollars in existence. Very interesting. We're almost done here. Where are we at? We're at 32 minutes. Let's bring this home. Last thing I want to show you here. Is this is really important. I want to get this to where you can see it really well again. Overnight reverse repurchase agreements, treasury securities sold by the Federal Reserve, and the temporary open market operations. In the temporary, very simply, it can be a little tough to understand these repos. It's called the repo market, reverse purchase agreements. As simply as I can explain it, these exist to give money to banks, to capitalize banks, basically overnight, because even overnight they're running out of money. There's so much money shifting around that that's what they call a liquidity crisis. It's not that the banks don't make money, it's that they have so many irons in the fire, and because the money supply is drying up, they don't have enough to cover all the different institutions that they need to pay out to, and so they borrow money overnight. Okay, just it keeps them going for another day. But the whole on the big picture, in the big picture here, look how much is that's going up. This is to all banks. Before 20 okay, so we see right here, see that little tiny blip? See that? That was the financial crisis starting in 2008 right there. And these repo agreements did not exist then. People thought it was a bad idea. Okay? They had to make special laws to make these overnight lends happen, because we used to not want to help out a failing bank, and now that's all we do. Okay? But again, that's called a parabola, right? Another parabolic chart right there. Straight up. Is it gonna make that same shape again? Well, it might. And what would that entail? That would entail, I suppose, they stop making overnight loans. Why? I don't know. What would cause that? That's a question for someone smarter than me. Okay, let's bring this home. 35 minutes. Michael Gayed on Twitter says, I can't help but look around this airport wondering how clueless people are to what's going on in the financial markets and how devastating it likely becomes for each and every single person distracted by this bullshit. Well said, Michael Gayed. This is, it's like if you understand this stuff, first thing is that it's so big, but it's also slow moving. And when you really get this, it's like you're walking around with a secret, because other people, they make it complicated on purpose. But this is generational event. This is we're looking at the destruction and the death of an empire. It's that big. This is really serious. And so I know how this guy feels. And I'm not even someone that can fully understand this. And I can't imagine how it must feel for people that have even more in-depth knowledge than me. It must be pretty awful feeling. But I did make this episode to be helpful. And I do recommend that whoever you are, if you did make it all 37 minutes of this and you enjoyed it, I fucking appreciate you. Thank you. This is some heavy shit and it's tough to understand, and I hope it made it simple. I try my best. I recommend taking some money out of the bank, taking it home with you. I recommend buying some silver, get some emergency food supplies, emergency water supplies, fill up your gas tank, and say your prayers, because some big shit's happening. And with that, I do appreciate you for watching my show, Psycho Silver. I want to be here every night, and hopefully my shows can be a little more fun than this. This is kind of poopy. I don't want to do this every night. So serious. But I did enjoy my time, and we'll do this again very, very soon. I appreciate you, and you have a good night.